Have you ever wondered what keeps a giant company steady when the world around it feels like total chaos? Well, today, we're pulling back the curtain on the invisible shield that protects businesses. And no, it's not magic. It's the art of managing risk.
So let's just start right there with that question. Seriously, what is it? What really stands between a successful company and all the craziness the world can throw at it? What's that shield?
Because let's be honest, every single business out there is basically navigating a constant storm. You've got markets that can tank overnight, supply chains that can break, and of course, things like natural disasters that nobody sees coming. The real question isn't if a business will face risk, it's when.
Okay, so if risk is the storm, what's the solution? Well, it's not just crossing your fingers and hoping for the best. It's a very deliberate, structured way of dealing with all that uncertainty. It's an art form, really.
And this is what we're talking about. Risk management. In plain English, it just means you have a process. You actively look for what could go wrong, you figure out just how bad it could be, and then, this is the important part, you do something to soften the blow before it happens.
And the things you're looking for can be, well, almost anything. You've got the obvious one, market volatility. But what about when a major client just can't pay their bills? That's a credit default. Or when a key piece of machinery breaks down. That's an operational failure. And yeah, those natural disasters are on the list too.
So, how do businesses actually fight back against all this stuff? What's in their toolkit? It's not just one magic bullet. It's a whole collection of strategies they use to build a kind of financial shield. Let's open it up and see what's inside.
You can pretty much boil it down to three main plays. First, you can transfer the risk. You basically pay someone else to worry about it for you. That's insurance, right? Second, you can spread the risk out so one bad event doesn't take you down. We call that diversification. And third, you can lock in a price or an outcome ahead of time. And that amazing strategy is called hedging.
Now, the whole point of using these tools is pretty simple. You want to prevent a catastrophic loss. You're building a financial fortress, a shield that lets you keep doing business even when things get totally unpredictable.
Okay, all this theory is great, but let's talk about how this stuff works in the real world. And for that, we're going to look at an industry that has to deal with massive risks every single day. The airlines.
I mean, think about it. For an airline, one of their absolute biggest costs is jet fuel. And the price of that fuel can go completely haywire because of global events they have zero control over. A sudden price spike can literally erase their profits overnight.
So what's their move? They use that tool we just talked about, hedging, specifically fuel hedging. It's basically a contract where they agree to buy their fuel in the future, but at a price they lock in today. Now here's the trade-off. They miss out if fuel prices suddenly drop. But that's not the point. The goal isn't to get the best possible price. It's to get a certain price. It's about predictability.
And this slide just lays it out perfectly. It's like looking at two different worlds. On the left, without hedging, their costs are a complete roller coaster. They're totally vulnerable. But look at the right. With hedging, they've created stability. They know what their biggest expense will be, and that lets them protect their profits from those wild market swings. And this chart just drives the point home. That first bar, that's the chaotic market price, bouncing all over the place. But that second bar, that's the nice, stable, predictable price the airline locked in. I mean, that's the difference between chaos and control, right there.
So let's zoom out. Why does any of this corporate finance stuff matter to the rest of us? What's the big takeaway here?
Here's the bottom line. At its very core, risk management is the art of staring into a chaotic, messy, unpredictable future and finding a way to make it predictable. It's about creating stability where it doesn't naturally exist.
And when you think about it that way, you realize this isn't just for big companies. We all do this, right? Buying car insurance, putting money in a savings account, it's all a form of risk management. So I'll leave you with a question to think about. What's the biggest risk you're actively managing in your own life?